Hello, good evening, everybody. Hello. Hi, how are you? Hello, Meg. Good evening. How are you? Welcome, everybody. Good evening. Welcome to our live training tonight. How are you all doing? Hi, Mary. How are you? How has your day been? Welcome. Welcome, everyone. Hi, welcome. Good evening. Okay. Hello and welcome. How are you all doing? Great to have you here. I hope you're ready for tonight. Welcome. Meg is gonna keep tagging and we can get started. I hope you're doing well. Happy to be here. Feels like it's been a while. Wait, it hasn't really been, has it? It's good to be here, guys. I hope you're doing well. Okay. I'm gonna get started. And well, if you're here already, why don't you go ahead and introduce yourself in the comments? Tell us your name and where you're from. What state are you residing currently? Where are you from? Hello, Funke. Good to have you here. Welcome, everyone. Tell us your name and where you're from. What states are you currently residing? Okay. And I'm going to introduce myself as well. I know every day we have new people join us, so I have to continue to introduce myself. All right. My name is Yinka Olumorin. I am a coach on this wonderful platform, Acquire Real Estate. Okay, and yeah, I've done a couple deals ranging from wholesaling, lease options, fix and flips, rentals, long-term rentals, short-term rentals, multi-family properties, new constructions, multi-new constructions, single-family new constructions. And yes, go ahead and introduce yourself. I see some of you guys are introducing yourselves already. Welcome, guys. Keep doing that. And this is a newbie platform. And we're very passionate about newbies because we were fortunate enough to get our business started on the right platform, the right way. And of course, we continue to build on that for people who are within our program. So within 36 months of starting real estate, we moved our business from 6 figures to 7 figures. We're able to get it right. And right now we're laser focusing on newbies to help them get them ready for their first deal in the shortest time possible. I invest in my husband, Dari. Some of you guys here know him. He's the licensed builder and he helps our folks with things that have to do with scope of work, all things construction, contractor related. And I'm happy to be here. I want to hear from you guys. Please introduce yourself in the comments, where you're from. I see Yinka from New York. Hi, Yinka. Yemi from Texas. Houston. Hi, Yemi from Houston. Yvonne from Massachusetts. Hi, I'm guessing that's Boston. Pretty cool. Sunshine from California. Okay, cool. Wow, okay. And Meg from Seattle. Thank you, Meg. Thanks for everything you do. Hey, Nana from Massachusetts. Hi, Ruth. Yay. Good to have you guys tonight. Okay, so tonight we'll be talking about how to know that a property is a good investment. And the reason for this is because honestly, you have no real estate business if you cannot tell whether you should buy your property or not. Okay. You have nothing to do with real estate if you don't have that information. How do you even approach a lender if you don't know whether the property makes sense or not? It's literally impossible. You will get denied. Unfortunately, you can't get lending for a property that you have not looked at or have no clue how to even determine whether it's a good investment or not. So this is a very important topic. Well, maybe you've been dreaming of investing in real estate, but you have no clue. And you're depending on a friend to come through for you with their knowledge. So the thing is, I've actually spoken to a lot of people who made that mistake. They tell me their friend is very good and has investment properties. Unfortunately, the project they're working on together is not going well, and they're not sure what is wrong. Okay, so everything is wrong with that. Everything is wrong with what you don't know. You need to be able to vet the property yourself. So yes, so please type yes in the comments if you're ready to dive into it. Type yes in the comments if you're ready for us to move forward. Also remember to introduce yourselves in the comments if you're just joining us. Are you ready? Are you ready? So let me get some yeses. Okay, I see a yes here. Cool. All right, so let's go right in. Let's dive right into it. Okay. So the first thing you want to do is to check the markets. Okay. You want to check the markets, making sure that the market you're looking at is actually a good market. Okay. No brainer, right? You know, there are a lot of different markets in the USA. A lot of different markets. Okay. You can be up in Boston or New York, California, Ohio, or Oklahoma. There are a bunch of states, and within each state are different markets. So how do you really know how to figure out the markets? Okay, so I think my presentation is going the way that things can go sometimes. Okay, where you kind of have like a split screen. Okay, I'm trying to make sure that doesn't happen. Okay. All right, so if you have any issues seeing what I'm showing you, let me know so I can make an adjustment on my end. I think it might be like a network slowing down or something like that. Anyway, if you're just joining us, oh, thank you, Meg, for telling me the slide was off. Just seeing your comments. Your comments are like on my lower screen, so sometimes it looks like I'm looking around, but I'm really trying to share, see what I'm sharing, see what it looks like to you guys, and also see your comments. So sometimes I'm like, anyways. All right, so checking the market is very important because there are different kinds of markets in the USA, and you need to understand how that works and what each market looks like. Okay, so there are a few things you want to check in a market. People moving in and people moving out. So let me ask you, if you had to choose a market to invest in, would you choose a market where people are moving into or where people are moving out of? Let me see that in the comments. Would you choose a market where people are moving into or where people are moving out of? Let me see if you guys have a clue. And I think you do. I'm sure you do. Would you choose a market where people are moving out of or where people are moving into? Exactly. So you're choosing a market where people are moving into, right? Okay, so you're checking the market, yes. You're choosing a market where people are moving into. You guys are correct. Exactly. And why is that? The reason is obvious. But why do you think you would choose a market that people are moving into as opposed to people moving out of? Why? Okay, so let's know why you think people should be moving into the market you're investing in as opposed to moving out of it. Okay, and it's interesting because people actually neglect this when they're searching for a market, when they're trying to figure out what market to invest in, right? So let me know in the comments what you think about why we should choose a market where people are moving into. Okay, so we choose a market where people are moving into because crystal clear, you want to do business where people are, right? Yeah, it shows that it's worth investing in. Yeah, because in business, you're dealing with people. You're dealing with people in business. So you're going to choose a market where you have people to rent properties to, people to sell properties to, right? Pretty common sense there, right? So you would definitely want to remember to check for this. Are people moving into this market or they're moving out of the market? And trust me, different markets have different statistics based on whether people are really moving into it or whether people are really moving out of it. Okay. The other thing is appreciation. And appreciation is really properties going higher in value. Some markets are better than others. Some markets have higher appreciation than other markets. So if you had to choose, would you choose a high appreciation market or a low appreciation market? High or low? Type in the comments. Would you choose a market that has high appreciation or would you choose a market that has low appreciation? If a market has 12% appreciation and another market has 6% appreciation, which one would you choose? Knowing that if it's at 12% appreciation, the property goes high. Properties, generally speaking, in that market go higher by 12% every single year. And if it's a 6% market, same, right? Go higher by 6% every year. Exactly. So you go with the high appreciation market. Okay. So you're going with high appreciation. The other thing you want to check for is the population. Of course, the more the population, the more people you have in that market, the more likely that you have people to sell business to sell a property or to rent a property to, right? So the population is a big one. Definitely want to check that. The other thing you want to check for is employment, which is directly related to the economy of that market. What is the unemployment rate in that market? What is the employment rate in that market compared to the other markets? Are other markets doing better or is this market better than other markets? You want to check for job growth. What is the statistics on job growth? Our job growth is job opportunities, or job opportunities or job growing each time in that market. Our industry is moving into that market. We definitely want to know if industries are moving into that market or industries are moving out of the market. Can you guys give me an example of a market where industries are moving out of and a market where industries are moving into? Type in the comments. Let's see what you guys know about this. Do you see some people building like headquarters in some markets, and in some markets they're actually closing down their headquarters, for instance? What are you guys seeing? Are you seeing some companies moving into some markets from other markets? Are you seeing like a trend? Can you type in the comments one market where a lot of people or industries are moving into? And it's just not just one market, it is a couple of markets, right? Can you give an example of a market where people are moving into, or a market where people are moving out of? Okay, I think my screen might be stuck again. So let's make sure. Let's make sure. Okay, I think I have the best internet so far. I'm just hoping it corrects soon. So what do you guys think, right? What do you guys think about Texas? If you're in Texas, you probably can see some industries moving into your market. Can you see that? Okay, my slide just corrected itself. Can you see industries moving into certain markets? Can you see some industries moving out of certain markets? Have you seen industries move out of California? Right? So those are some things you look for. Right. Those are things that actually also determine whether the population would increase or not. So industries moving in and out of the market. The other thing you need to be able to determine whether to do this or not in that market, or to do real estate invest in that market, is the crime and school information. So what is the crime rate in that market? What are the school ratings? Are those high crime areas? And also within states, there are certain areas that high crime, there are certain areas that lower crime. Right. So you want to know, I mean, you don't want to set up an investment property where you have, your security alarm is consistently going off, and you have theft situations. They're stealing your appliances, refrigerator, washer, dryer, and tenants' belonging. I mean, if you're stealing tenants' belongings, it's very unlikely that that tenant is going to last long in that property. And what happens as a result is you have a high vacancy rate on your property. You have a high turnover, which is something you want to avoid, right? So definitely the crime information and the crime rates does matter. Do they have good school ratings? If they have good school ratings, it's likely that people would want to buy properties in that particular area, right? Because they want their children to go to schools in that area, or they want to rent in that particular area because they want their children to benefit from the good schools in that area, right? So the crime information is good schools also. Okay. And then where to find information. And I'm going to check on this slide again to make sure. I know it's off right now, but it should correct itself in a little bit because I'm on it. It's good. It's corrected. So where to find information. This is something that I'm going to provide to you guys after the training tonight. So stick around and you'll get that. If you're already in the inner circle, you don't need this and you already know. But then if you're not in the inner circle, definitely stick around and you're going to get something, okay, at the end of the training, okay? All right, the other thing you want to check in a market is the comparatives. And what do we mean by that? Okay, let me correct the slide again. We want to check for comparatives, okay? Yeah, I see that, Meg. And I think it's something that has to do with like network and on Facebook, things translating from my end to you guys. So, but the screen is corrected now. So we're checking for comparatives. What are we saying, or what are we talking about when we say comparatives? What does that mean? Okay, so we're talking about similar properties in that area. Okay, similar properties. So comparatives are really properties that are similar in number of bedrooms, number of bathrooms. What are similar properties going for? Right. What is the worth of properties in that area? Because that would largely determine what your own property would be worth, right? So you're checking for comparatives in those areas. You're doing a CMA or market analysis for comparatives or comparables in that area. Okay. You're also checking for prices, right? So you're checking for prices on those properties. What are properties going for that look similar to the property or investment property that you are considering for that area, right? So you're checking what similar properties are, and that's really what comparatives mean, or comparative analysis. You're pretty much just analyzing properties in that area within a few distance in that area to see what that market looks like. Because the only way really to analyze or to know is to check on similar properties or similar scenarios in that particular market. And that's really how you analyze a market. So you're not just checking on those properties in terms of bedrooms and bathrooms, in terms of prices. You're also checking on the condition of the property. What do you think of a property that needs a lot of work and a property that doesn't need a lot of work? Which one would be cheaper? Which one would be more expensive? The one that needs a little bit, the one that needs a lot of work, what do you think? Do you think it'll be cheaper? Do you think it'll be more expensive? Right? You can type that in the comments. And that's why we have to make sure that we're comparing like properties, that they are actually similar. So after you're comparing the bedrooms and bathrooms, you're also comparing the condition. Thank you, Yvonne. Cheaper. You're comparing the condition of the property to be able to say, I have some comparables in that market. The other thing to look for is the days on market. Okay, so you're checking comparatives and you're also checking the days on market in that particular market, in that particular location. And that is really what you're doing to analyze, to really know if this investment property is worth buying. Is it like the similar properties? What are prices looking like in that market? Is that looking like a target market to me based on what it looks like prices are going for? How about the condition? How do I measure that with other properties? Because guess what? If you're not looking at the condition of a property, you are not analyzing the property. Okay. Then the other thing is days on market, meaning how long would this property stay on the market before it sells? And days on market is a regional thing. Okay. Places have different averages for days on market. Some markets have higher days on market, which means that it will take longer for properties to sell. And some other areas have lower days on market. So if you guys have to choose for a lower days on market, or DOM as it's called, or higher DOM, which market would you choose? Higher DOM, lower DOM? Please type that in the comments. I want to make sure you guys are all following us on this. Would you choose a higher DOM market or a lower DOM market? Higher, lower. Okay, Yvonne says lower DOM market. Lower DOM. Okay, cool. Who else is telling us what you're choosing? Yeah, yes, one gets at lower DOM. So definitely you want to choose the lower days on markets, if that makes sense, right? Because you want your property to sell quickly and not just drag on the market. The longer your property takes to sell, the less you make on the sale of the property, unfortunately, right? So definitely want to choose a market that has lower days on market. Okay, the other thing that we mentioned slightly is understanding repairs. Okay, repairs are everything. Okay, repairs are everything. Doesn't matter how much of a sense a property makes to you. You definitely gotta do your inspection, right? And inspection can mean you actually ordering for an inspection, or you actually having a walkthrough by an experienced and licensed contractor, okay, to be able to know what your repairs look like. My slides are off again. I'm just gonna refresh this because it shouldn't show anything right now. Okay, so now we're back to real life. Okay, so you want to understand repairs. Okay. And the thing is, repairs can actually change everything. It can make a deal that looks very attractive and nice to become sour, to become a reason why you would never invest in real estate again. You see people who have really bad experiences with real estate and vow never to try it again. These are people who did not do their due diligence with repairs. Okay, it can change everything either for good or for bad. Okay, you can either lose a lot of money or gain a lot of money. So repairs are everything. Okay, if you try to stay away from properties that need repairs, guess what? It still bites you because you don't even know if there are things that are hidden that you don't know until you go into the property. So it's very, very important to be able to understand how repairs work. Okay. Very important to understand how repairs work. Okay. The other thing is talking about repairs. We're talking about forced appreciation. If you have taken the training, the 3 secrets training, you already understand what forced appreciation means. It means that you're forcing a property to appreciate. So you don't even have to wait for the yearly appreciation. You don't have to wait for 5 years to get to a certain property value or 10 years to get to a certain property value. And that's what a forced appreciation does. Forced appreciation means you're putting work into a property and causing the numbers on the property to go up by a lot in value, right? So rather than waiting for equity to happen or appreciation for the future to happen where properties are worth more, you can actually do a quick artificial one or forced appreciation. It's artificial, but it's real. You've improved the property, you've actually increased the value of that property. And that's why understanding repairs is important because it saves you years of waiting. Okay. So it saves you a lot of years of waiting on nature to bring about appreciation or increase in value of a property. And then the other thing about repairs is this. Look, you need help. Okay. And nobody really expects you to already know how repairs work. That's something with real estate investing. Okay, you have to have help. You can't do everything on your own. When you set up your business, you're really setting up a team as well on the side who are going to make all these things happen for you, right? So you're not expected to be an expert coming into real estate investing. Not an expert, you're not expected to be an expert on repairs or contractor. You're not expected to have experience even or to even know everything, right? It's something you learn as you go, but not the hard way, because the hard way actually can prevent you from making progress. I'm telling you, you're gonna vow you never did it. So it's very important to get help when it comes to repairs. Okay. So repairs are very important, and you need to have the right help to help with repairs. Okay. So if you need, there actually is a training. Let me see, real quick. If you need a training on vetting a contractor, actually, because you need contractors to help you with repairs. But also, contractors is a situation. You can get into a situationship if you land the wrong contractor. Ask people, they're gonna tell you stories. So if you need the training on vetting contractors, let me just double check on here. Definitely type training in the comments. Type training in the comments if you need, if you want that training on vetting contractors, while I double check on my end on this. So type that in the comments. If you need the training on vetting contractors, just type training in there. And I want to look at something for you guys on here. So let's see. I just want to double check and see if you guys need an extra resource. Okay. Okay, did you guys type training already? Okay. Anyways, so yeah, I can see a few people. Okay, and some of you already have those trainings, right? Let's type training so we can see. Okay, so Meg, are you able to actually see, are you able to put your link, your DM link on there in the comments as well? The thing is, actually, so Facebook changed their rules on DM. Even if Meg sends it over to you, you're probably not going to see it. So as you're typing training in there, she's going to take notes and just make sure that you're getting it. So that's why it's important to type training in the comments. But she's also going to post her link. If you can post your link here so that people can message you directly to request it. And when you message her, you're going to also get that. It's sure that you're going to get that. Then it's sure that she's going to see, or you're going to see her message. But the other thing though is you still need to type training here so she can keep track of who needs it, because otherwise she can't really keep track. Okay. Okay, I see you guys try typing that. So definitely want to understand how to vet contractors. Okay, definitely. All right. Then I want to talk about the place of negotiation. So when you find that a property is not a good deal, after doing your checks, you can actually use that as a negotiating tool, okay, for a price drop. So you can use your information because you know how to do your due diligence and you have information on this property. You've checked the markets, you've checked the property comparables. You see everything right in front of you, and you can already tell that that property is overpriced. Of course, if you don't see all that, you're not going to know that property is overpriced, right? Okay. So you can use this as a negotiating tool. Also be careful when you type on Meg's link so you don't get out of the training. I think some people got shut out of the training after typing that. You can wait after clicking on that. So you can wait to be done with the training before clicking on that, but make sure you do so she doesn't miss sending that over to you. Okay. I see the slide is stuck again. Okay, I'm not sure at what point that happened, but that should correct itself in a moment. Okay, so we're talking about the place of negotiation. If a property is not a good deal, you can actually go back to negotiate. If you don't know, you're just going to think the property is cheap. You cannot tell a seller to drop their price, except you have a good reason. Because the thing is, every seller believes their property is worth $1 million and more. You know, they've built this emotional attachment to the property. They feel like this is the best property ever because they're so used to it. Some sellers who actually lived in the property feel like the property is the next big deal in the whole world, right? So that's why you can't just tell a seller to drop their price, except there's a reason that they need to see and believe. You're understanding how repairs work. You're understanding what the value of their property should be because it should be like other properties in the area. And you're explaining that to them. Okay. At that point, you're in a place of negotiation. And really, negotiation is difference between $20,000 or more, okay? Just a 5-minute negotiation, whether over the phone or in person, can earn you $20,000 right off the bat. So negotiations are very important, understanding how to handle that. So you understanding the worth of a property actually puts you in a place where you're able to negotiate correctly, okay? Negotiation can be the difference between a gain and a loss, okay? The difference between making money and losing money is in the place of negotiation. And that is why it's so important to understand how to analyze a property to know whether it's profitable or not. Then the other thing is the type of property, the property type, right? The type of property can really determine whether it's a good investment or not. What does this property look like? There are definitely some properties that you should not buy. There are definitely properties that you should not be caught buying. Okay. There are properties you should not be caught buying. And if you don't have that, again, we're just going to move on to our resource because that's actually another training on its own, but you're going to get it for free, of course. And we'll just move on to our resources for the nights. So for the properties that actually you should not be buying, type houses in the comments if you want an in-depth training on the kinds of investment properties to avoid. Okay, very important. And then, of course, the other category is for a select few. If you have any questions, type them in the comments and I can look at it. Type that in the comments. But then definitely type houses in the comments if you want the training on the types of houses or properties not to buy. And of course, the other category is for select few who need additional help getting started doing their first deal. You guys ask sometimes, what is a deal? A deal is a property you buy as an investment, either to give you monthly passive income or to give you a massive payout. For example, when you buy a property for low and you sell the property for high within a few months, that is a massive payout, right? And usually the average is about 50,000 or more. As a matter of fact, our students don't go for anything less than 40K. We ask them not to go for anything less than 40K, right? So, because it is a massive payout. And that's really what forced appreciation does for you. It gives you a massive payout. But the good part is you can do it even with no money in your account. The minimum credit score you need is 620, okay? And another good news is you can do it with poor credit score. So even if you're not 620, there are ways around it because we use asset-based lenders and we connect you to legitimate ones right within the program. And those are affiliated with us. So here's how it works. On our initial one-on-one conversation, we'll provide you with a free strategy to get started buying and profiting from properties. So if you want to see what our inner circle looks like, where we provide you with a hands-on approach, guiding you through your deals from beginning to the end, definitely type inner circle in the comments or in the chats, and we'll reach out to you to pick your time slot, okay? You also get free real estate investing advice. So type inner circle in the comments. Make sure to type inner circle. And it was nice being here. I don't have any questions from you guys, so that's good. It means we did a good job with the training. Hopefully it was simple enough. It was nice being here tonight. And I hope you all got value on this training, as well as the other ones we have in our vaults and our resources. Hopefully you guys see all the trainings we have. They are massive. So see you soon, and I say have a great night. Bye.